Hello everybody, this is Toni Turner and welcome to the market now as of Lucky Friday, May 13th at about 1 p.m. Eastern. Well, the stock market is bouncing today from yesterday's close and an oversold condition. All 11 S&P 500 sectors are trading higher with gains ranging from 0.3% consumer staples to 2.8% energy. The heavily weighted information technology and consumer discretionary sectors are pulling their weights thanks to renewed buying interest in the mega caps. And on that note, let's look at three charts that could give us some insight into the week to come. As we always do, we're going to look at the SPY, the S&P 500 Spider, which is the ETF that represents our S&P 500 index. But today we're going to do something a little different. We're going to look at a weekly chart of the SPY, the SPY. Many times, if you flip back from always looking at daily charts and look at a weekly or monthly chart, it will give you information that isn't readily apparent on the daily chart. And many times, support and resistance zones can be even stronger if you take them from weekly or monthly charts even than from daily charts. So longer term can sometimes be stronger. Now, when I capture this chart today, as you can see, the SPY was trading at $401.24. That's about 16% below the SPY's last all-time closing high, which, as we know, was up here in January. Actually, January 3rd at $477.71, or about $47.77 on the S&P 500 itself. Now, we know that that after January, the SPY rolled over from its highs and fell down dramatically. It fell down to this low here, and then finally down to 410 in February. It gapped down on February 24th, actually, it gapped down to 410 and closed higher on that day. Then it ran back up to 441, then settled down at 415 lows, then moved back up to 458, and then 462 up here. So you can see that it marched back up each time, but it got back up to what was support, became resistance. Couldn't draw a straight line there, but it's the right thing. And moved back up to that, couldn't go any higher. And that was our clue. When the market could not move above that 462 high, and the prior one was 458, then we know that there's definitely some selling and resistance going on. It rolled over and came back down to where we are today at 401. Actually, it made a lower low yesterday. We'll talk about that in a minute. But if you look at this chart, what you can see here is something you can't really see on the daily chart. We can see a small head and shoulders here. We can look at the neckline. We can either draw it here, or we can consider the second little rally to be a shoulder as well, and we can connect it down there. Either way, head and shoulders are top reversal patterns. Now, they don't always mean that price is going to move into a big downtrend, but a lot of times they're not very bullish, that's for darn sure. So we know that it moved up. If we call this the head and the left shoulder, the head and the right shoulder, we know that it moved down to this 415 zone, popped back up, 462, then back down. So if we break this downtrend line here, which we did yesterday, and trying to move back over it today, if we do that, you've got to know that this week's low so far, and of course the week will end today at the close, is 385. That was yesterday's low. The last time we were at 385 was actually in February of 2021. So with that said, we do have this low here at 385. We're going to have to watch. We're going to, fingers crossed here, at least if you're bullish, that this market can move back up and not sink below that 385 or stay below 401. in the upcoming week. And next week is really going to be very telling. What we're going to need is a higher low here, or at least support this 385 low. If it can start back up, there's a lot of work to do, but 385, 400, very, very important here to see if the S&P can do that. So keep your eye on that, and please know that if the S&P starts heading lower in the coming week, we really do need to either stay on the sidelines and stay very, very disciplined if you're a novice at all, because it's hard to tell which way it's going next. And at the moment, although today was very nice, one day does not make a bull market. So please be careful and stay disciplined. Okay, our next chart today is a daily chart. We're back to our daily chart of the Invesco QQQ, symbol QQQ. Of course, the Qs represent the NASDAQ 100, a major index in the market with all the big momentum stocks in it, the Apples, Amazon, Googles, or Alphabet, I should say, Facebook, and so forth. Now, when I captured this chart today, the QQQ was trading at $302, actually right about even at this moment in time. That is trading at 25% below its all-time closing high, which was way back here in November of 2021. So we are definitely in bear market territory here. When a stock or an asset trades 20% or more below its all-time high, then that means it is in bear territory once it gets below, and we're at 25% actually today, below that all-time high. Now, the last time that the QQQ was here at 302, 290, right in here, was actually way back in March of 2021. So we know that from the January high, the QQQ skidded down here pretty darn dramatically. It came down here, down to the January lows, moved back up, then gapped down on February 24th, and it gapped down here. Almost everything gapped down on February 24th and then rose higher as people said, okay, this is the market bottom. Please know, when you look at the chart of the SPY and the QQQ and all of the other stocks that you like to look at, please know that one day up does not make a bull market. And this is a very clear example of that on the QQQ chart. It gapped down. Everybody goes, oh, well, okay, that was a low. Well, you know what? No, it wasn't. Because from here, excuse me, it skidded back down again. And from 318, then went back up to about 350, then fell back down here and did it again. And came down to 317, and then everybody goes, oh, well, that was the low. Okay, that was the low. We've got a little double bottom going here, so that's just wonderful. It came back up. It rallied way back up to the 369 level, right up here. It did manage to fight its way through the 50-day and the 200-day moving average, which is encouraging. But the reason you'll hear me say a lot of times, if something closes above resistance 3 days in a row, closes 3 days in a row, not just trades above, closes above, that can sometimes be telling. And in this case, the Qs could only trade above this 200-day moving average and close above it one day. Then it fell back down. So was this the bottom? Well, clearly it wasn't the bottom. And that's why I want traders who go, oh, well, this is the bottom, this is the bottom. Be careful. Absolutely nobody on the planet knows exactly when the bottom hits unless it's really good luck. So we are down now. The QQQ fell down yesterday. Yesterday's low was $285. Today it's back up to $302, and that's a good thing. Is it going to go straight up from here? I would not bet my duck slippers on that, and I only bet them on sure things. But is 285 a valid low here to look at? Sometimes we'll call it a tradable low. Absolutely. But I'm not real big on getting into new positions right before the weekend, so that's up to you. But please know that when the Qs start back up here, it's got to come back up. It's got to get through 310. That's a big resistance area here. right around 310 up to 330, big resistance area. So keep an eye on that. Keep an eye on the cues if you want to get into any momentum stocks, because this will be, we could kind of call it your leading indicators. So going into next week, again, please remain very disciplined. If you're not sure what's going on, sometimes it's best to be on the sidelines. Our third chart today is a daily chart of the Consumer Staples Select Sector Spider Fund, the XLP. Is this very conservative? I'm going to call it. It is not certainly a momentum tech play in any way. Yeah, that's exactly. If you want to be in the market and you insist on being in the market, probably, as you can tell by looking at this chart in comparison to the other two, this is one of the quote-unquote safest places to be. The Consumer Staples Select Sector Spider Fund, the XLP, has 32 holdings. Some of the top ones are Procter & Gamble, Coca-Cola, Pepsi-Cola, Costco. This is kind of a nice way to get into Costco, and it's not as expensive. And Philip Morris. Philip Morris always does well in down markets. I guess people smoke more. Okay, so we had a recent all-time high here. You don't see that in many other ETFs, except maybe energy. We had a recent all-time high here on April 21st at $81.34. Now, when markets move down hard, everything can kind of get thrown out with the bathwater, as they say. So then when it came from this all-time high up at 81 and change, then the XLP moved down with the rest of the market, which I just showed to you, that big leg down that the SPY and the QQQ took. It did get hurt here, but it certainly didn't get hurt as much as most of the rest of the market. So it came down here to today's current price at $76.56. You can see it's been consolidating here for some time, drawing a triangle. The lows are about even here, down at about 76, right at the 50-day moving average. So today it's struggling to stay above the 50-day moving average, but this is the consolidation zone. And we can see here that it's forming a triangle. We know about triangles. They either break out to the upside or to the downside. Now, if this market rolls over again next week and starts lower, it's possible that consumer staples, which is always one of the most calmest, if you want to call it that, place to be, it could roll over too. And I wouldn't force myself to buy anything in the coming week, because it's going to really be where the rubber hits the road and we're going to see what happens. But if you really want to, notice that what I'm going to do, again, today it's trading at $76.56, right above this 76 line. In the coming week, if the XLP can stay above 75, I'll give it that much. If it can stay above 75, but notice this support line here. Okay, that's pretty darned important. So I'll give it to 75. If it can stay above 75 in the coming week, I may add some shares of the XLP to my trading portfolio. I will place a hard stop with my broker if I enter the trade at $74.50. I'm not going to kid around with any of these trades. Oh, no, I'm not kidding around with anything when the market's acting like this. I'm putting my stop in, period. Now, if and when, and maybe it happens, if and when the XLP can rise up and close above $79 for 3 days, if it can close above $79 for 3 days, I will add to my position with a trailing stop, of course. So you may want to keep an eye on the XLP in the coming week. Now, please know that this is the perfect time to invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include these programs include our flagship trading, 7 Steps to Successful Trading, an awesome learning product. Also, how to swing trade successfully. That can come in handy in markets like this. how to trade the trend to profits. This is a little simpler way of looking at the market and staying in for the longer term, which right now is going to work perfectly for bottom fish like a pro, because this is the time in the next few weeks that I suspect learning how to bottom fish will be a very, very profitable thing to know. And then when you know how to bottom fish, you can switch into trading the trend for profits, which of course is easier than some think, and sometimes more profitable even than short-term trading. For people who are fairly new to the market, how to read charts is a great way to, a simple and easy way to learn how to read price charts. And of course, the all-time favorite, 3 winning setups. So these programs are timeless. They can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen up here, or better yet, click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.